So let's start first of all with your most recent public research on Huishan. Where did you get the short idea on Huishan?
Well, we actually started looking at Huishan a couple of years ago, shortly after its IPO. And at that time, we felt that Huishan was too good to be true. The yields that the company claimed from its cows were, that was definitely too good to be true. We had concerns about the alfalfa as well. What happened then, though, was the stock corrected. It went down 20-25% in, I think, a few days. And so from our perspective, we couldn't commit to continuing to research Huishan at that time because stock could fall apart completely by the time we finished our research. So we just put it to the side and moved on. And then I think it was last May, I saw on my terminal, I saw a headline that Huishan it had announced that it had entered into a sale and leaseback agreement on dairy cows. And I laughed out loud when I saw that. It became kind of a little bit of a joke in the office pretty quickly. But then we checked the borrow on Huishan and saw that there was borrow. We looked at the stock chart and we saw that the stock had gone up a lot and then had kind of flatlined at $3, but there was a lot of valuation and market cap there. And so then we thought, hey, the stock evidently, there is a reason to consider shorting the stock, and let's pick up our research from a few years ago and see what we can find on Huishan. So that's how we got here.
How much did you borrow at that time?
Oh, how much stock did we borrow? I mean, we don't talk about the sizing of our positions, but it's and it was still it's still a difficult stock to borrow. I mean, the interest that we had to pay on the stock that we borrowed was generally about 15-16%. So you don't want to borrow too much for too long, obviously.
Yeah, it's not uncommon for you to see the stock's price up and down after your report, but Huishan took like 3 months. Did you expect that?
Well, okay, so our strong belief about Huishan before we published is that it was a manipulated stock. So anytime you see a long-term price chart that's a flat line, that's a good indicator that the stock is being manipulated. So now I don't know for a fact who was manipulating it, but anyway, we figured that by releasing the report, what we were hoping to do was we were hoping that there would be so much selling that whoever was manipulating the stock wouldn't have enough money to keep the floor under the stock price. We were wrong. It's quite possible that these people anticipated or were concerned about some sort of report, so they had enough money to keep the floor there. But I knew that eventually, someday, it would break. I didn't know how long it would take to break, and that's the thing with what we do. The analogy that I use to describe short side activism is that we try to knock over a bunch of dominoes. And so we don't know how far the dominoes fall, and we don't know which dominoes are ultimately going to fall. But in this case, the dominoes all did fall. It just took 3 months.
You just said you were wrong, but can we say that you were wrong in the case that you lost money in this case?
So, I mean, we were wrong about whether we could generate enough selling on that day to overwhelm whoever was manipulating the stock. So we were wrong about that. I just want to make clear, I'm not saying we were wrong about the thesis. Look, it would have been certainly more convenient if the stock had fallen apart closer to our report. I'll allow that. As I said, the borrow fees on the stock are pretty expensive, but overall, I'm very happy with the result.
You know the stock has some problem, and you know it's manipulated. If we were like 4 months ago, can you do anything else? Will you change your strategy?
Well, I mean, if I went back to May, the thing about every trade, okay, after every trade, you look back and you say, I was either too big or I was too small. We were too small.
Okay. And I'm looking forward to your reports on other HA companies. you said that you're going to release a bunch of them. Are they big names? Are they widely traded?
So we're looking at a few names in Hong Kong. A few weeks ago when we spoke, I thought that we were quite close to releasing a report, and this happens a lot in my business because we put there's so much detail in our reports, and there's so much information, and we want everything in our reports really. We like to think that they're perfect before we release them. So in this case, it turns out that we got a little bit bogged down in our research, and it's going to take some more time for this one company that I'd been thinking about. But in any event, yeah, I mean, I'd say that the market caps that we're looking at in Hong Kong are usually north of 8 billion Hong Kong dollars. And one of the companies that we've looked at is actually a lot bigger than that in market cap.
You said you know which has problem years ago. What about these companies? How did you get the short ideas of these companies?
Well, a lot of it is too good to be true. So if margins and profitability are too good to be true, sales growth seems too good to be true, these are the things that raise the initial questions for us. Or if companies don't seem to be subject to a business cycle where they've got down periods and up periods. Those are things that will cause us to look closely. And when you look at financial statements, if you suspect that there could be fraud, the first place that you want to look is actually the balance sheet. And you want to see how the accounts on the balance sheet on the asset side have changed over time. So the reason for this is if I have a company that is reporting fake profits, okay, so I'm making up a lot of my profits, that creates what I call a fake cash problem. Because if I had real profits, I would have real cash. And I could put that in the bank, and then the auditors could verify that that money is in the bank. But what happens when you're reporting fake profits and you have this fake cash problem, you have to come up with an excuse for why you don't have all this cash. So you'll see maybe accounts receivable blowout or an inventory account blowout, or very commonly what we see in China is a lot of CapEx and a lot of acquisitions. And so if we see that, then we really ask ourselves, okay, well, what sort of research would we have to do to confirm whether they're buying legitimate assets or whether there's a good reason for the accounts receivable to blow out versus are they using this to commit fraud? And so then a lot of it for us becomes a question of how, what kind of resources are needed to do this work. And we have to look at it on the other side. Okay, how big of a short position are we likely to take? How much of a fraud do we think this is? Because, to be quite frank, in the world of China stocks, and if you're going to say a company is increasing its revenue fraudulently by 10%, the market doesn't usually care about 10%. If this were outside of China, 10% would be a big deal. But so we have to really think about how profound is the thesis versus the resources that are needed to produce a report.
Interesting. You know the culture of the market very well as well. How many people do you dedicate to each case in Hong Kong?
Well, so we have our internal team. So the core research team at my firm, including myself, is 5 people. And then when whenever we're researching something, we use consultants and investigators and other researchers. So it's, there's never a fixed team size, so it really varies.
So you work on multiple cases at the same time?
Yeah, we do. We're working on 2 or 3 at the same time. In this business, it's actually kind of hard to work on 2 equally well at the same time. So we tend to focus on one, but we'll try to move along 1 or 2 others in the background.
The regulators in Hong Kong crack down, like Moody's, Citron. What do you think of that?
Well, I think each case had facts that were particular to it. So I don't know that, I mean, what I took away from that was, I mean, we always are very, very careful. There's always more that we know than we actually say, because maybe we don't have 3 sources of evidence for it, only 2, so we won't say that. So when we look at what's happened with Citron and Moody's in Hong Kong, it's just a reminder that we have to be very, very diligent in what we put in our reports and what we say publicly.
Is it because, like in Hong Kong, there is more individual investors than institutional ones? So maybe the shareholders need more protection, so they want to protect the individual investors more. So that's why they tighten their regulations.
Well, that's an interesting question as to why. I don't really. I mean, you can look at Hong Kong and say there's some things that Hong Kong does that are protective of shareholders. And you can also look at it and say, well, there's some other things where there are markets outside of Hong Kong that are more protective of individual shareholders. So I really don't know the policy reasons behind what they did. I just know that that's the playing field in Hong Kong, and you have to respect that.
We are now at NASDAQ. Like 2 decades ago, a lot of Chinese companies took pride in ring the bell here. And a lot of US investors, they chase after every Chinese concept, and that all changed. A lot of people say that you play a very important role in the change. What do you think?
Well, yeah, I think that's somewhat accurate. But what also has to be considered is that a lot of the companies that listed here a lot of them were frauds. So what we did was, it wasn't to make people say, oh, I hate everything that comes out of China, but it was to say a lot of these companies have problems. There have clearly been gaps in the system that's supposed to regulate these companies and protect investors. And so I think what we did was we caused a lot more scrutiny to be placed on these companies. And the change was profound, because my impression, say from 2010 before that, is that in China, US investors were kind of a joke, because we were considered to be so gullible, and we just believed everything. These companies would come to the US and say, oh, well, Chairman Wang has this thing called guanxi, which means connections. And American investors would just say, oh, guanxi, that explains why he can grow his business much faster than everybody else in the history of this industry has. And so what we did was, I think we opened up investors' eyes so that they looked at those, when they heard statements like those, they just said, you know what, I don't think this is true. And so I think that was the big change that we helped drive.
But nowadays, do you think the US investors are too sophisticated in Chinese companies? Because I do came across investors in the US, they will not touch upon any Chinese companies. Like before Alibaba's IPO, people say, oh, I know this is a good company, but I will not buy it.
Well, I think that some of the things that also complicate it for US investors, so there are a couple of things that I think are issues that have remained unaddressed. One is the structure, the legal structure that a lot of these companies have when they list in the US. They are what we call VIEs, or variable interest entities, which means that as the shareholder of the list company, you actually don't own the main operating business. And I think that's a very dangerous situation. Now, to be fair, that a number of these VIEs, they have gone private, and even though in reality the chairman and whoever brings them private could have just taken the operating business out from underneath the public shareholders, to be fair, almost all of the time the public shareholders have gotten paid. There have been a couple of instances where VIEs have just been robbed of their assets, but those were generally smaller reverse merger companies. But I think the VIE structure, I do think that's an issue. I have ideas on how to address it, but I don't think the investment banking industry here would find those appealing. The second issue really does come down to how much politics and business are mixed in China. I mean, it's very, very, even for Chinese business people, it's difficult to understand and predict the environment. But there have been, of course, high-profile cases of public companies whose chairmen have, whether in Hong Kong or the U.S., have disappeared and supposedly been, they've been detained. And I know that's something that scares a lot of U.S. investors, because you're thinking, how do I understand this risk? How do I price this risk, or the risk that another company will become politically favored and will crush the company I'm invested in? So from a foreign investor standpoint, the political risks, the political business risks of China or investing in China are they're very high.
And one thing is that you captured a problem in a company, like the political risk. The other thing is that you have to translate that to your U.S. investors to make them believe in you as well. So that is two things, right?
Well, I mean, we don't look at political risk when we're, I mean, that's not really what our short theses are based on. I mean, we've seen situations in which, I'd say, if you look at a company that we shorted in 2013, NQ Mobile, Wang Qi.
Yeah.
So that was one where it's a company that clearly did not have political protection, because CCTV had done an expose on it, accusing the company of cheating its customers. So that's one that we felt more confident shorting, because one thing is, in our position, we're sometimes worried that there'd be people who would really look to protect the company and help cover up the truth. And if the truth gets covered up, the stock might not go down and we might not make money. So that's something that we give a little bit of consideration to. But in general, when we communicate our theses really are, hey, this company is a fraud. We think at least this much revenue is fake. This undisclosed related party that is the main supplier or customer is not a real business. Here's the evidence. I mean, that's really our core way of putting together a China short.
Your father used to be a long investor. If he came up to you and said, I want to buy Alibaba, what kind of advice would you give him?
I would say, that Alibaba is a bit of a tough one for me. Look, there's a lot there that's genuinely impressive. Okay, I had a real world business in China before I started Muddy Waters, and I can tell you how difficult it is to scale a business anywhere, but especially China. And so Ma Yun has done an amazing job building that company. That's on one hand. On the other hand, you have political risks, and I know sometimes, people in the U.S. will say, yeah, I'm a little worried about Baba, it's so big and powerful. I wonder, if that's sensitive in China. I don't know. It very well could become sensitive. I don't know how to handicap that risk. And then on the other hand, yeah, there's an element of Baba that's too good to be true. And so if my father asked me for my advice, I guess I would just say, look, talk to somebody else. I don't have an opinion.
Is there any Chinese companies right now listed here in the U.S. Raise your eyebrows? You think you want to do a research on them?
There are companies, when we look in their filings, we'll see yellow flags or red flags, and that we'll think to ourselves, these companies are probably frauds. But the issue for us is that the bar. Okay, so if you're sitting around watching us talk about a given company that we've started researching, the bar for us to say this is a problematic company, let's say that bar is here. We're all skeptical people in my firm. We've been doing this for years, but the bar to convince the long shareholders to sell is much higher bar.
Yeah.
So the question that we have to ask is whether we think that within our resource budget, we can meet that bar. That's a different question. So yeah, we'll see these companies that are suspicious, but a lot of them we just say, I don't know how we would prove it to the satisfaction of the shareholders.
Recently, you published an article on U.S. market is more likely to default. So can you maybe elaborate more on that idea?
Sure. So I'm sure most of your viewers are aware that right now the politics in the U.S. are not exactly smooth.
The Trump rally.
Yeah. Well, yeah. We had the Trump rally, but the thing is, what nobody's talking about in the U.S. is that we have hit what we call the debt ceiling.
Yeah.
And so the U.S. government is not able to issue net new debt above this level. And so Treasury only has so much cash on hand. And that money, without our ability to borrow, which we already passed the debt ceiling middle of March, without the ability to borrow new money, so in order to borrow more, Congress has to raise the debt ceiling. And in the past 5 years, we've had that situation twice, and it's gone down to the wire. It's been very close in the past to where the Treasury ran out of money and was not able to make interest and principal payments on the debt. Fortunately, in the past, enough people from both parties came together and they raised the debt ceiling. But what's interesting here is that a lot of people assume that because the one party now controls the White House and each of the two houses of Congress, a lot of people assume that it won't be a problem to raise the debt ceiling.
Sure.
But I think it will be a problem because within the Republican Party, you have these factions that are very divided. And there's a faction in the Republican Party called the Tea Party. And the Tea Party, these are the people who were the ones who greatly resisted raising the debt ceiling in the past. I mean, their view is that they want to starve the federal government of revenue in order to force it to get smaller.
Yeah.
And so they really could end up, so my base case scenario is that the US will not default. I think enough cooler heads will prevail and will avoid a default. But I think we get closer to a default than we have in the past, and a default is a real risk because if the Tea Party people cannot, if enough of them don't change their minds about not raising the debt ceiling, I don't think the Democrats are going to help the rest of the Republicans raise the debt ceiling. I think the Democrats would rather watch the Republicans commit political suicide than help them out.
And a lot of people think that we are now in a very dangerous late bull market. A lot of stocks are boosted by unnaturally cheap money. So does that mean an easier environment for you to have a short idea?
Yeah, I mean, so probably the number of bad companies that are out there is the same as it's always been, but the difference is you've got more bad companies with real market caps now than you used to have. So from a short seller's perspective, that's a positive. But on the other hand, with the market just constantly going up, it's actually pretty frustrating. And people seem to have forgotten about volatility. And the thing that amazes me the most is when you look at the implied volatility of the market, it's so low despite all of these massive geopolitical tremors, if not earthquakes, that we're having. So, and from a short seller's perspective, I guess if you don't think, I mean, volatility has to pick up in order for some of these short theses to play out. Because otherwise, if everybody is really complacent and the market just keeps doing this, a lot of the stocks that should fall won't fall.
The return is pretty good, like 16%. So is this much more or less than Muddy Water Research?
For legal reasons, I can't comment on performance. You might have been referring to the flagship fund that we launched on August 1st of last year, and so that had less than half a year of performance. But we were very happy with the performance of that and our day one fund as well. So yeah, in terms of, is it similar to the returns that we produced before? Yeah, somewhat. I mean, obviously in the first 1 to 2 years of my business, we used more options because we had less money, and you could make 200% a year. So can't compare, can't compare to those periods. But generally, I like to put up about, this was pre-managing money on my own money, I would try to put up about 30% a year. That would be a decent year.
And you took like $100 million money from outside, and you say you will never take more than $500 million. Why is that?
Well, for what we do as short activists, it's very limited capacity, and even 500 is, I think, too high for what we do. So I don't know what the limit is. The other thing that we can do, if we come across a trade that's particularly that has a lot of capacity, we can always take in more money for purposes of that trade. But I think day in and day out, probably don't want to be too far above $200 million. That's my feeling at this point.
I look at the research saying that assets under hedge fund that is targeted on short companies is only like $5.5 billion. That's relatively very small. So is the circle very small? Do you all know each other and talk?
I think a lot of us know each other. It is a very small and shrinking universe of short sellers. I mean, talking, occasionally. I mean, I sit in San Francisco, so obviously most funds are here in New York. London has a lot. I don't speak or socialize that much with fund managers and analysts who are based in London and New York. So, but yeah, just like anything else, I mean, people within the industry, they talk to each other. I mean, at varying amounts.
What do you enjoy right now? For example, in the past, you said that you enjoy investigate into a company, you enjoy the field work, and now you don't do that. And here, the hedge fund society is here in New York and London, but you are not here. So, what's the most enjoyable time in your life like?
Heavy is the head that wears the crown. I now have a bigger business, and I do a lot of what I call principling. It's not a real word, but it's my version of saying that I have to act as principal. So running a business that is now bigger, especially regulated business, there's a lot of time I spend on legal. There's a lot of time I spend on just talking to vendors or potential strategic partners, marketing. So there's a lot that I do these days that's not directly involved in the research. And the problem, I really like doing the research, and I also like a lot of what I do as a principal as well. It's just the biggest problem I have is that it's two different speeds of thinking. Your brain runs at two different speeds. So if I'm marketing, or I'm talking to a potential client, or if I'm doing an interview with you, my brain is running at somewhat of a faster speed. But to do research,